Okay, if you're gearing up for the CPA exam, you know every single point counts. Today, we are going to lock down a topic that always shows up, the petty cash fund. And we're going to make sure you don't just memorize the rules, you actually get them. Let's do this.
All right, let's just dive right in. I want you to imagine this isn't a lecture. Think of it like a hands-on simulation. You're the accountant, you've just been handed this petty cash box, and now it's your problem to solve. Your mission, figure out what's inside and tell me if we're short on cash. Ready? Now, before we can crack this case, we gotta have the right tools. We need to understand the rules of the game. And for petty cash, that means one thing, the Imprest system. Think of this as our official investigation toolkit.
So, the most important word here is Imprest. It's a fancy way of saying the fund has a fixed, set balance. It's that simple. Just picture this. There should always be exactly 25,000 pesos worth of stuff in that box, whether it's actual cash or receipts for things you bought or some combination of the two. It always has to add up to that fixed amount.
And this quote really nails the why behind this whole thing. This isn't just about having some cash lying around for coffee and donuts. No way. It's a really smart, really simple internal control. Because the amount is fixed, you are forced to account for every single peso that was spent before you can refill it. It's a fantastic way to stop cash from just, disappearing.
And you know what's really cool? The accounting for this is super simple. Here's a little secret for you. You almost never touch the actual petty cash fund account in your books. The only time you debit or credit that account is if the company officially decides to change the fund's total size, like bumping it from 25,000 to 30,000. All the daily stuff, buying supplies, paying for a delivery, that gets tracked through expense accounts, not this main one.
Okay, toolkit assembled. We know the rules. So back to the mission. The books say there should be 25,000 pesos in this fund. Let's pry open that box and see what we're really dealing with. And here it is. Our evidence log. This is a classic problem you'd see on the exam. We've got some cash, some IOUs, a few checks, vouchers, a little bit of everything. Our job, as the accountant/detective, is to sift through this and figure out what actually counts towards our fund and what's just noise. First LECPA hack, and this one is huge. Watch out, because this is probably the biggest trap on the exam. An IOU, or an NSF check that bounced, that is not cash. It's just a piece of paper that says someone owes the company money. So, from an accounting standpoint, it's a receivable from that employee.
Okay, next hack. You see that 5,200 pesos that's earmarked for the Christmas party? That is not the company's money. It's just cash the employees collected, and they're storing it in the box. As the accountant, you have to ignore it. Just pretend it's not even there. It has nothing to do with your fund count.
Now, what about that P11,200 check? Well, since it's from the company and it's made out to the petty cashier, we know it's a replenishment check. Think of it like an IOU from the bank. It's as good as cash. So yeah, we are absolutely including that in our count.
All right, we've separated the real evidence from the red herrings. Now it's time for the moment of truth. Let's run the numbers and find out if we're short, over, or if by some miracle, everything is perfectly balanced. Don't worry, it's a simple two-step process.
This is the one and only formula you need for this whole topic. It's just pure logic. What you should have, that's your accountability, minus what you can actually account for. The difference tells you if something's gone missing.
Okay, step one, accountability. What is the total amount that should be in that box? Well, that's the Imprest balance the company set, right? Which we know is 25,000 pesos. That's our target, that's our baseline.
And now for step two. Let's add up everything we actually found that counts. First, let's tally up the valid cash items. We have the actual currency, the company's replenishment check, and that personal check from the officer, which we'll treat as cash. That gives us 18,000. Next, we have the receivables from those IOUs. That's 2,500. And finally, we add the valid expense vouchers for 3,250. So all told, we have accounted for 23,750 pesos.
And now for the big reveal. We take our accountability of 25,000 pesos and we subtract the 23,750 that we actually counted. And the difference is 1,250 pesos. We're short. Somewhere along the way, some cash has walked away.
And here's a super simple rule to file away for your journal entries. A cash shortage basically acts like a miscellaneous expense, so you always debit it. And if you ever get lucky and have an overage, that acts like miscellaneous income, so you credit it. Simple as that. Shortage is a debit,
overage is a credit.
So, mission accomplished. We found the 1,250 peso shortage, but we're not quite done. The final part of the mission is to put it all together and prepare the journal entry that officially replenishes the fund for the next period.
See, this journal entry is where the whole story comes together. We debit all the things we need to record, the expenses that were paid out, the new receivables we have from those employee IOUs, and of course our cash shortage. Then, the total of all those debits is our credit to cash in bank. That's the amount of the check we need to write to bring the cash in the box right back up to that 25,000 Imprest balance. Perfect.
Okay, before we sign off, let's do a quick rapid-fire debrief. These are the absolute key takeaways you need to lock into your brain, not just for the board exam, but for your career. Think of this as your long-term retention cheat sheet.
Seriously, take a mental screenshot of this slide. Imprest means fixed balance, period. IOUs are always receivables. That party money doesn't count. A shortage gets debited, and the whole point of this entire process is about one thing: control. If you can remember these points, you've totally mastered petty cash.
And there you have it. You just successfully audited a petty cash fund from start to finish. You know, this whole process of accountability, of verifying what's there, of investigating discrepancies, it's a mini version of what auditors do for an entire company. By getting this down, you're building the exact skills you'll need for your career. Mission complete. Well done.